Hello there and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for all fellow members of CommunityFT also. And what we're going to do is have a look, as always, at some interesting asset classes and analyse the movement and possible future price movement from the same. But before we do that, let us take a quick risk warning and embrace the risks associated with trading, because without risk we wouldn't get return. So at this point, if we can all familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. Okay, in front of us guys, let's take a look at the content for this evening, or for today's lesson, okay? We're going to have a look at the Canadian dollar in light of some report, or in light of expected reports released tomorrow, or so important economic data we might say. And then let's have a purely technical look at the daily stock price of Tesco, okay, or the daily chart of Tesco. So in front of us now, everyone, let me just get myself arranged here. We're looking at the daily chart of US dollar versus Canadian dollar, okay. The first thing any observer of capital markets would note here in this particular instance is over the last given period of time, the strong net uptrend of the US loonie market. Okay, and what that effectively represents is the weakening of the Canadian dollar. Okay, simultaneously or parallel in time, we had a strong fall in price around this point in time of crude oil. Now, because the Canadian dollar as an economy is so correlated, or is so dependent, I should say, to crude oil, there exists a strong anti-correlation between this chart and the price of crude oil. So anytime crude oil has a notable bullish move, usually the Canadian dollar strengthens, and vice versa will be true, and that's an anti-correlation, okay? But let's take a look at what's been happening more recently. So we see that the 55-day exponential moving average has been relatively accurate in this market with regard to signaling breakouts. Now, at this particular point in time, you may have been wondering why it didn't work out here and how would we account for that? Well, one thing we could use to help us look for where the breakouts are actually accurate is confirmation from the stochastic oscillator. And the stochastic oscillator is not so much good for overall trends, but can usually signal what way the market is going to go in a small ranging period, almost like a Fibonacci retracement, or even less though. Okay, and effectively then we see the overbought level here being signaled and a subsequent drop in price then, okay, and that's what the stochastic shows. So that could be confirmation then, if effectively used with the moving average or exponential moving average crossover as well, okay. But if we take a look from a more general perspective, and I want to make sure everyone is aware of this, okay, of the overall trajectory, if you will, of the loonie market versus the dollar, okay. Let's take a look at what we see. There is an equidistant channel coming to light, okay? And what it effectively shows then is a net bullish uptrend over the last given period of time, whereby the market has obeyed this gradient in its high prices and simultaneously in the low prices as well. And that can be used for gaining an understanding of where possible opportunities lie if that gradient is not followed. Usually in this case there could be possible short opportunities being looked for. Okay, let's take a look at Tesco, right? So on the daily chart of Tesco, we notice a little bit of movement, not much significant movement compared to previous times, okay? But there's been a little bit of ranging, and now it seems that we're in the middle of a bearish run. And we'd like to discuss how we know if that bearish run here is good or bad or indifferent. So let me add in at this point the stochastic oscillator, okay? And let's take a look then at what we know, or what we see or observe. And we have also the money flow index for a 100-day period as well, and that can effectively just help us then see the majority of cash flow in the market, because it is the volume we're concerned about, and that is which moves the market. Let's take a look at the oscillator and see if it's been accurate. Well, a couple of times here it wasn't too accurate at all, okay? It was almost early in its convergence. At this point it was very accurate. This point as well is very accurate. Just here it was accurate, but almost a bit early as well. And at this point it's showing strong convergence that the market is oversold, okay? And in other words, that means the retracement is on the cards. And the money flow index, however, is actually saying the opposite. The money flow index is saying the opposite to that, okay? But we see that the money flow index has actually taken, over the last little period of time, a slight retracement itself. So that could be a possible insight as to what opportunities lie then for a bullish retracement in this market. Okay, so we hope that's been of help. If you have any further questions, do not hesitate to get in touch. We look forward to hearing from you. Welcome all inquiries. Have a terrific day. We'll catch you soon, and as we say here, keep learning.